Hi mate, so yeah, your analysis is fine mate, it's really good. The concept behind it, so you got in, I think you marked up here, didn't you? So yeah, that's the last down before the up move. If you were fast enough, you could have got in on this one, but it's still a bit of a, it's more of a gamble really mate. Allow it to break away first, obviously push upwards, come back down to mitigate out of this, and then push up. But yeah, you're really spot on there, mate. Your entry would have been pin perfect. That would have been a really, really good trade. That was no drawdown, and it just would have been straight into profit, really, mate. But ideally, you don't want to start your trade there, if that makes sense. So with the 1 hour, 2 hour, 4 hour on a daily, you need to be aiming for like long sort of trades. So this where you are, to me, would be what I do, and what I call it is stacking. So you stack it on top of your original trade, if that makes sense. So what you've got here is, let's go on the 4 hour. So I'd say overall, yeah, overall we're pushing downwards. Yeah, so we're bearish. So overall on the bigger time frames, we should be looking for sells. Okay, so but here in the smaller sort of scope, we're pushing higher. Yeah, so you just need to try and get into them positions to pull a trigger, if that makes sense. Okay, so what has happened here is, let me get my rules up. Text. Okay, so the top-down analysis, which we just pretty much done then quite quickly. So the overall trend direction is downwards. Yeah, but obviously doesn't mean that you cannot buy. Yeah, so where is the order block or the IC candle? So you've identified one, you've seen one. Yeah, each up before the down move is pretty much an institution candle. So this one here is last up before the down move, but really this is in a middle of a range. Yeah, if that makes sense. So your range is from the high to the low. So that's your range. Okay, from here to here. So yeah, I'm not saying don't do it, but if you can get the full range, obviously that'll be a lot more beneficial for you. Yeah, so it's a bit like, I guess, I don't know, swinging a golf club. If you can swing from here to here, you're going to get more power on the ball. Yeah, meaning a bigger sweep, a bigger scoop of a trade. Whereas here, you're halfway, if that makes sense. You've missed from here to here, so you missed all that out. But that comes with confidence. You know, a lot of people, which I did in the start, waited for this move to happen and then got in there because they knew it's pushing down. There's more probability of it to push down. Okay, so like I said, there's totally nothing wrong with your setup, mate, at all. It is good for, obviously you're only about 2 days in really. Yeah, so what I would be looking for is, so what happened here is we're in consolidation period. Okay, so this is called a distribution. Okay, so it's just a sideways movement. Yeah, which it's doing nothing. It's going nowhere really, mate. Yeah, you can trade a little bit of it, but nothing huge. So what has happened then is that there's a lot of liquidity built up here. Okay, so see where, let's get rid of this. See where all the wicks have come. Yeah, there's orders below there. So what retail traders people are doing, they're getting in here, they're putting their stop loss underneath. So that was a typical bank move there for you. So visual orders into the back. Yes, let's make this a bit bigger. Yeah, so what people would have been doing is they would have been getting in here on a buy. Yeah, so see the purple one. So it's come down, pushed off, come down, pushed off, come down, pushed off. And what people will be doing is, oh, every time it's coming down to here, this is a resistance area or support area. Yeah, so people would be buying here. Okay, so if they got in on this one or this one or this one, let's say for example we get in off here, off this one. Yeah, where does our stop loss go? It goes below the previous wick. Okay, what happens then? It goes in that direction, but the bank, and that is your typical FU candle. Yeah, this here is your fuck you candle. So the banks literally take people out, take all these people out here on purpose, and then push up in the way that these people wanted to go. So they say, thanks for your money, see you later. Yeah, now the banks have done that, they have to come back into that area to mitigate out. So mitigation is, so what the bank would be doing here is they put a big sell on, yeah, here, from here down there. They push it down, take the people out, but what they do, they push it very, very quickly up. So now they are in drawdown, so they don't use a stop loss. Okay, so now they're in drawdown because obviously they put a sell on. So now this is all this up here is negative for them. So what they want to do is obviously they need to come back into this area to break even or get like, I don't know, 100 quid with your profit or something. So the banks they are literally playing with 3, 4, 5, 600 million pounds worth of money, yeah, to do this. To move 1 pip in the market, the bank needs to put down 100 grand. Okay, so it's a big move. So there's a lot of liquidity sat up here now, yeah, because the same thing. So that's been and gone pretty much. The bank has got their money back. Okay, so now there's liquidity sat up here, yeah, in here. Yeah, so the same people I've got in here, they'll try again and again and again. They're in profit, but what they do, this greed kicks in, right? So they'll get in here, pushes up, comes back down, and think, oh shit, I should have taken that, yeah, and then they pretty much break even. They push up again, maybe let's say £100 profit, but they still don't take the money off the table because they think it's going to go higher than here, yeah, because greedy people. But what happens then? We get a break of structure, and the bank takes everybody out with a massive, huge engulfing candle, pushes down, takes all these people out. Yeah, all this. There's a lot of orders here. I mean millions and millions and millions of pounds. So the bank literally takes all these stop losses out. Sorry, wrong way. Yeah, where would our stop loss be if you were doing retail? Below the previous wick. Yeah, so the bank literally pushed up and then bang, straight back down. Last up before the down move. So we know this has got the money in it. This candle was, unfortunately, didn't really work out here for some reason. Sometimes it doesn't, but this is the important one. Yeah, this is the one that broke structure. Therefore, the money is sat in there. Okay, in that candle there. See the clear one in the back? Well, not in the back, but yeah, it's sat there. Okay, so what we would do is we mark that out, open, and 50% of the body. Yeah, so we mark out 50% of the body and open, where the candle opens. Sorry. So that is the last up before the big down move. Obviously, opposite this here is the last down before the up move. Okay, so now what we've got is break of structure here, yeah, which is important, meaning that the market now wants to be pushed down. Yeah, but again, this here up here is the last up before the down move. Yeah, there's a big down move there. So where's price at now? Yeah, so current price action is up here. Yeah, so the bank may well be coming up to here now to mitigate out of this order, to break even again, to then push down again. Doesn't look like it because it's trying to push quite hard, push upwards. But check that in about 2 hours, see where it's at. Okay, I just want to check my gold, mate. It's 2:45. So gold typically makes a big move at 2:45. Doesn't seem like it's doing much today. It is Friday. Yeah, it's not really moving at all. Market goes a bit quiet on a Friday, but yeah, it doesn't seem to be doing much. audnzd. So yeah, that's last down before the up. Sorry, last up before the down move. So that could have been an area. Yeah, you just got to identify these areas. So what I would be looking for is, because it's broken structure, it will need to come. So it either would have come up to here, into here, and pushed down, or it's come up a bit further to this area. So obviously we can see it's broken through this area, so that wouldn't have worked. And this is where risk management comes, risk to reward comes in very well. So if we'd have lost that one, 1%, 2%, 2% here, 4% maybe. If we did get in here, which I wouldn't, because it looks like it's pushing quite hard, but if you got into them three, they all lost, that's 6%. But if you then, let's say for example, it may well want to come up to maybe here. Yeah, maybe let's go off this one here. See, there's the last up there before the down move. So there's liquidity here as well. See, there's a double top here. Okay, so the market may very well want to come up to here to take this liquidity out first, mitigate out of this candle, and then push down. So like I said, possibly we've just lost 6% taking 3 trades. Yeah, but if we were to take this trade, yeah, from here, so the same concept. So our stop loss goes to be above the previous candle or the wick, the high. But then we're targeting, your TP should be previous lows. Okay, so if we're taking it down to around about here, this is at 8.6 to 1. Yeah, so if you're risking 2%, this now is what's 8.6 times 2, 16. This is a 17.2% growth. Yeah, so this would have been 17%. Let's just round it off, make it easy. Yes, that would have been 17% growth. Minus your 1, 2, 3 trades in here, minus 6%. Yeah, so we're still up 11% growth. That is why Forex is very, very good, and risk management is very, very key. If that makes sense. Just undo. Really, I'm not keen on Australian pairs, mate. Yeah, that's just personal preference. They don't move very nicely. You'll learn what pairs you like though, but it all works on every pair. It even works on crypto stuff. But you can see it's rejecting off this area now. So yeah, what we would typically be doing now is we're on obviously a 4-hour time frame. Yeah, so if we did mark this out, so let's just delete everything for now. Let's say that's the last up before the down move. Okay, so just be aware that obviously it has been mitigated once, twice, 3 times, 4 times. Yeah, but the banks obviously have got every right to come back in to mitigate even more maybe. Okay, so let's just mark it out anyway. Yeah, so why I've done that, that's open of the body and 50% of the candle. Okay, so let's change it to IC. So IC is a markup area, institutional markup area. So this is just my personal preference of marking stuff out, so I know what I'm doing. But if we drop it down to the 2-hour, and let's see what we've got. So now this candle, before it was from the top to here. So now what we've got is this candle here. So see the smaller one. So what you're doing now is getting tighter entries. Okay, smaller entries, smaller stop losses. Sorry. So let's do open of the body 50%. Yeah, so let's just mark this out. I think it's just rejected off that area. Not far off. Yeah, so Again, I'll just change this to my markup area. So obviously this one now is void, yeah, because it's no good to me. It's been filled. The bodies have pushed through it. Okay, so let's drop down to the 1 hour. See what's going on. Yeah, so it's pretty much the same. Don't go less than 30 minutes until you're very confident. Okay, so even the educators, they're quite wary of the low time frames. 30 minutes is the very lowest. I would ideally, if you're new to smart money, I would just stick to 1 hour and the 4 hours. Yeah, and just obviously make sure you're using correct risk management anyway. So that's our area. Yeah. So if we targeted there and we wanted to go, let's say off, let's just go in the middle. So our wick, our previous high would be there. Yeah, so my stop loss would be obviously on the green line, or I allow a little bit extra. Okay, so you can see now it's rejecting off that area. So now if we would have taken that trade, yeah, we would have been in a very small, depending on spread, very small profit. Okay, so we'd be looking to take this down, like I said to you before. So remember before what I had was 17% growth, wasn't it? But now I've chopped down my stop loss, made a smaller stop loss. Let's go back to the lows and see what that brings us. So now this trade is the same, 17%. Obviously, if you can get a tighter stop loss, obviously your risk to reward is better. Yeah, so let's say about 17% growth. No, sorry. Yeah, so if you're risking 2% times 17, so yeah, so 17 times 2. So that's now a 34% growth. So yeah, I was right. So whereas before, so what we have done is obviously we've halved our stop loss, which is great. Yeah, because obviously if it does go the wrong way, you're losing less money. Yeah, so that's just a tight entry and tight stop loss basically. I think it's trying to drop. Yeah. Yeah, going back to the rules, which I've lost. Rules. They're not really, I wouldn't say rules, but it's just what I stick to, what I like to look for. So you also need to understand. So obviously, number 1 we've done, number 2 we've done. So where is price? So that just basically means where is price now? What's it trying to do? Yeah, what's it trying to accomplish? Is it trying to push upwards? Yeah, obviously it's showing signs of weakness here now because it's trying to push up, but it's just leaving wicks behind. Yeah, and the body has not closed above this body here. So let's just move this green line for now. So see the green on the purple body, yeah. So at the time, so wicks are just noise to distract you from true price action. Okay, so obviously the body has not pushed through this area. Yeah, it's rejected off. So this could possibly now be selling off. Okay. So what else do we have? What does price want to do next? Obviously, that's really it's a vague question really because we don't really know, but it seems to obviously just want to be. It looks like it wants to drop. Obviously, it's just showing signs of weakness. Is it retracting? Yeah, is it retracting, or is it trying to fill some imbalance from maybe over here? Yeah, imbalance is just where 2 candles don't fill it in. So this here is a massive imbalance area. Yeah, so from this wick on the left here, yeah, massive candle. Yeah, and there's no true price action come back up to fill it. So that's a wick to wick. So that's your imbalance. Okay. So obviously here we can see it's been filled. Yeah, it's been filled by all this price action here. Okay, all this here. So that's now void. That doesn't stand anymore. Yeah, but that's IPA, improper price action or imbalance. Okay. So this is just something I've sort of picked up. Does the candle close below or above the order block? Okay. So again, where does the body close? Yeah, so this candle now, 30-minute candle, I sometimes wait for it to close before getting in. So if this body pushed up and it closed up here, then I'd be thinking, do you know what? It's closed above where I want it to be. But if it closed down here and the next candle opened downwards, then I would get into it. Yeah, so that again it just comes with confidence, mate. Fib levels. So if we took a fib, so if we took a fib from this high, it doesn't seem like it's very accurate. Yeah, no, it's quite far out, to be fair. We could go to, yeah, that's not too far, but it's still, this is what you should be going off this here, because this is your range from high to low. Yeah, if you take it to over here, it's not far off the 89%, but it's not great. Yeah, so that doesn't really line up. It's not fantastic. It's not respected the fib levels. So direction of travel and the trend, we covered that. Imbalance, we covered that. So POI is just point of interest. Where do you want it to go? So sat nav basically is as it says, sat nav as in a car. So what I mean is basically you need to set a direction. So when you leave the house, when you leave from home, or even if you know where you're going, you obviously know in your mind, well, which route you're going to take. If you don't know, let's say for example you come and visit me, you obviously put it in your phone into a sat nav. Yeah, so you need to know this is your sat nav. Okay, so let's go on a little road. Yeah, we do this. We may come back up. Yeah, going the wrong way, or we need to do another U-turn. Yeah, start doing this. Yeah, and we end up in our final destination. Okay, that is our TP hit. Okay, so you need to know where you're aiming for. So previous lows for sells and previous highs, targeted highs for buys. Okay. Engulfing candle, which we did have. Yeah, we had. I think. No, we didn't actually. So engulfing candle we didn't have. Does the IC take out liquidity? So does the institutional candle take out liquidity? Yeah, it does. There's a little bit of where are we? So here, yeah, so there'll be a lot of stop losses here for sells. Yeah, so what it did do is obviously here, people sell, and then all of a sudden up and down. Yeah, so that's a good sign. There's money in there off the bank sitting there. Does a particular move break? Yeah, does it break market structure? It does, but it's not the greatest move really. Is it move? Yeah, it's like this one. This one broke market structure, but this one didn't really play out that well. We could have got a few pips out of it, but not amazing. So I'm yeah, this for me, I'm not overly keen on it. There's no fibs. There's match up with the fibs. Imbalance, I think, has pretty much all been filled anyway already. And this candle didn't really break structure. Signature move. So Wyckoff, I'll leave that for now. Check the higher time frames for where you're at. So so up to 2 and up to 4 hours. Check what they're doing. Or you should have done that in the start anyway, the other way around. So the weekly, the daily, the 4 hour, 2 hour, and then the 1 hour. The 20, 50s, and 80s is just basically the banks like to play off. So let's say like, let's find one. So like, where are we? So yeah, 20. So 75, 20 basically. 75, 50, and then 75, 80. Yeah, the banks like to play off their numbers. Number 22. Yeah, I think that goes right everybody. Yeah, that's typical. So what I was saying early on was there's nothing wrong with what you did, mate, but ideally what I wanted to start off with was obviously we've got break of structure here down to the downside, so we know we have to come back to mitigate somewhere, okay, because eventually it wants to push down. But what we did have then was a lot of a lot of liquidity sat here. Yeah, so this now is a liquidity area. Okay, and then what we did have then was obviously all this here took out this liquidity. Yeah, and then it is also break of structure. So we did get a break of structure. So I'd be looking for some buys within this area here, somewhere here, because it's broken structure. Yeah, here you don't really know. Yes, you could have taken maybe this, because it did just really break structure maybe here, but still it could have just been coming up back up to here to drop even further. So you know, here it created a kind of a new high, a new low, a lower high, just about a new high, yeah, and then just about a new lower high, and the same there again. Yeah, so this is just market structure, lower high. So you could have possibly, yeah, again, I'm not overly keen on that. So I'd be looking for, don't know really. Look at, so that's down, maybe, yeah, nothing overly stands out really, mate, to be honest. Maybe this one here, this is last down before the up move, so this is why it's important to drop down to different time frames, because obviously if we mark that out there, yeah, this wick, this candle did come into this candle, but not the body. So if we drop to 30 minutes, sorry. Yeah, so what we do have then is we've got this one on the 30-minute time frame, which is a lot closer. Yeah, it came in very, very close. Unfortunately, if you would have set a limit on that, you would have missed it, probably. Yeah, so it's important to set an alarm maybe. Yeah, so when it comes to like maybe this area, what's wrong with this? This area, maybe set an alarm there, so when it obviously crosses, you can jump on your phone or your laptop and monitor it. And that seems that would have rejected quite nicely. That would have been in profit straight away. And then you can possibly start stacking then if you wish, but it's not advised really, especially if you're quite new, mate. So yeah, last down before the up move, it's pushed up, come back down to mitigate, and then pushed up. Yeah, and then you could have had another entry off this one here. Yeah, so that one would have been a better one really. That would have been a better entry maybe. This is what was pushed up. It's broken. You've also got liquidity sat here. Again, this is pushed up, come back down to mitigate out again, and then pushed up again. Yeah, this is quite choppy actually. It's quite up and down, the price movement, price action on it. So I think this would have been your ideal entry, this one here. So open of the body, remember, and 50%. Let's change it to an institutional area. I see markup. What happened? Perfectly came into the pretty much the entry of the candle and pushed off. Yeah, so if you got into that from there, no, this is what I mean with the sat nav. We know the end location should be up here, or let's say maybe around this area first. You could have just kept a tight stop profit, pushed up into this area, and then followed it up to here. Now I think it's, yeah, it seems like it wants to push higher, to be honest. But yeah, that move there would have got you from there up to the top there, about 90 pips. Yeah. Yes, it did take 3 days, but if you're placing, you know, standard lot size on there, then it's good money. Yeah, nice move. So yeah, I hope that helps, mate. There's obviously a lot more to it. We can do a lot more. We can go over these in a lot more detail. But yeah, the ones in the purple I trade typically the most. Also GJ actually been doing a lot of lately. Yeah, so these pretty much show CAD JPY, Euros, GBP, USD, the US pairs, silver, gold, and then you got GBP, JPY at the end there. So yeah, don't get me wrong, you can trade different ones. So CHF for me is too slow, and the GBP pairs you'll need a bigger sort of stop loss. So just be careful with them. But yeah, good analysis for what you've got, mate. So that's a prime example. I think you got in at 0.7, 0.50, didn't you? 0.7. Oh yeah, so it was there. Yeah, there you go. 0.7, 0.50 was your stop loss. Entries 156. You got your entry at 6. Yeah, exactly the same place. So there you go, mate. Cool. So yeah, nothing major here really. You could have, like I say, got in some of these, but fairly risky because pushing up, down, up, down, up, down. It's not done clear structure or broken structure either on the way up as of yet. But yeah, it's broken here. Obviously, it's could have got an entry. Could have got an entry there, and then yeah, you could have caught that, mate. But yeah, that's pretty much it. I'll send this over to you now.